Good evening, everyone. My name is Juliet, also known as Crypto Queen. So I welcome each and every one of us to Crypto Queen Academy, and I want to believe that there are one or two things that were left behind to be part of this webinar. And I can assure us today that we will be leaving the call with values added. So this call is going to be very interactive. I'll make sure that I carry everybody along. And if you have any question, please don't fail to ask. If you can ask by raising hands, you can drop in the chat box. I'll make sure that I respond to them. So this webinar is supposed to be divided into two. We're supposed to be covering two things in this webinar. One for futures trading, how we can trade futures at a very low risk measures and still stay in the market without being liquidated. Second is how we can use an indicator momentum called moving average to spot the market direction. That's where we'll get what we call dead cross and golden cross. So, but before I proceed, I would like to get in the chat box a comment that I can hear you so that I will make sure that I'm not talking to myself. I'm sure I muted everybody. So let me know you can hear me so that I will proceed. I want to make sure that at every point that I'm carrying everyone along. So let me know you can hear me. Okay. So feel free to draw my attention back. Where I'm too fast, feel free to draw my attention back. So I know majority in this call, this webinar tonight, we are here because we have futures. I want to trade futures. I want to be part of those who make money in futures. Now, in futures, you can make money as soon as possible. You can make money fast. In fact, is one of the fastest way you can make money in crypto, trading crypto, and it's also one of the fastest way you can lose money. That is why recommendably it is advised that you do not just trade futures with emotion. Just don't trade futures when you are not sure of the market direction. So you must, in fact, futures are meant for experienced traders. But as a beginner, you can also trade futures when you can manage your risk. So I want to also recognize the presence of, we have Ezekiel on this call. Ezekiel is a friend and also a mentor somehow, a mentor. So he is well knowledgeable in the crypto world. So Ezekiel, I'm happy to have you here. I'm happy to have you here. Thank you for coming. So I would want to kickstart with futures trading. So the reason, before I proceed, let me quickly give a brief explanation of futures. So when we talk about futures, we are talking of a method of speculation on the price of an asset. So in futures, you can speculate that a price will go up, and when it goes up, you win. You can then speculate that a price will come down. When it goes down, you win too. So either ways, in bearish markets, when I say bearish, during downtrend of a market structure, futures traders are making money. During uptrend, futures traders are making money, unlike in sports, where you only buy at the top, at the low, and you buy lower and sell at the top. But in futures markets, whether the market is bullish or bearish, futures traders are making money. So, and we can actually trade futures and hold coins in futures for those who trade cross margin as long as we want, if only we can manage our risk properly. For example, it's not in this phone that I'm using for this webinar. I have a coin that I've been holding for about 3 months now in futures. So I've not got liquidated. That's because my risk is very low. So if you manage your risk very well, you can hold coins in futures and still wait to recover from it. So let's proceed. I would like to start by sharing my Zoom where we can see a clear example of what I'm explaining. So first thing you do as a futures trader is to activate your futures account. So before you can trade in futures, it is expedient that you activate it. Sometimes you may be asked for referral ID. You can ask anyone for referral ID for futures. So once you activate your futures, to activate your futures, if you are new, if it is the first time you're trading futures or you are hearing futures here, so you are meant to attempt some questions. So there are some questions Binance is going to present to you to answer. So when you fail, don't worry about the answer being correct or not. When you fail the answer, they are going to also provide you the correct answer. So you must pass that test to be able to trade futures. So once you attempt the test, you are good to go. So the first step is you are meant to move money from your spot wallets. So if you have USDT, you can trade USDT with USDT pairs. You can trade with BUSD. These are the two stable coin you can trade with in futures. There are other stable coins, but these are two stable coins that I trade with. Basically, I like to trade with BUSD. So once you come to your once you activate your features, the next is to transfer. Use the transfer button here. Transfer money from spot wallet. Sorry, you go to your features, not here. Click wallet to US futures. So either UBUSD or USDT. So when you select USDT, transfer the volume you want to. For example, I want to send $1,000 here. So you click on transfer. Although what I have here is BUSD. So here I have USDT, I have BUSD. So if I click on assets here, where is my marker? If I click on assets here, I'm able to see so I'm able to see the asset I'm holding. So in trading, we pay gas fee. So there are prerequisites to run a transaction, whether in sports or in futures. So we are meant to pay gas fee. So gas fee is either taken from your current asset, the asset that the position you are holding, or here in futures, you are recommended it is advisable to fund BNB, because when you are holding BNB, either in your spot wallet or your futures wallet, charges are very low. So if you are going to be charged, for example, 10%, 0.10 cents, with BNB, you'll be charged 0.8 cent, 0.8 cents. So if you have BNB, I used to see my BNB still remaining very little here. So I still have small BNB here. So if you transfer BNB here, when you close a trade, your trade will just take little gas fee from here. So the transaction gas fee will no longer be taken from your position. So this is the two currency stable coin I want to trade with. I'm trading with. There is BUSD, there is USDT. So moving on. So this is what futures trading page looks like. So we have here. So once you transfer, I forgot to say, once you transfer your money, you should be able to confirm that you can see the balance. So here, let me quickly explain something. This is the total US and the total stable coin I have, the worth of it, including my USDT and BUSD. So this is what is left here. This is also the same. This is what is left here. Sorry, this is total USDT. Then this is what is left after my total USDT wallet balance of the losses I have here. I have minus 13. When you minus 13 from the wallet balance, so you have the, so if I decide to close this trade now, I will have 4,574 as my balance. So, but currently I'm holding this because I want to believe that BTC is still going to go back. So my margin is very small. My leverage is very small. The reason I basically start with lower margin is because when I'm not sure of the market, just like we can see for the past more than 12 hours now, getting to 24 hours, BTC has been ranging within a certain zone. So it has refused to move up. It has refused to move down. Please, just a moment. Excuse me. So I'm using a lower asset here because in as much as I have higher, I have enough margin. So I'm using a lower asset because of the movement of BTC has not been, like BTC has not been able to say, I want to move up, I want to move down for almost 24 hours. It has been ranging between a certain level. It's not going up, it's not going down. It's holding a strong support, and it has not accepted to break the resistance. So at that point that the market is indecisive. So the best option is either you don't trade until a breakout is confirmed or a bearish downtrend is confirmed. So at this moment, I still have 100 and something USDT here. So if the market goes up, I have already set my buy order. If the market goes up, I spotted the next resistance to be 23. So if the market goes up, it's going to buy for me higher margin with 23 where it will average. So let's move on here in futures. One of the reasons people come to trade in futures is what we call leverage. So leverage gives you access to, it gives you a privilege to borrow funds. You leverage, when you say you leverage, you rely on something to be able to achieve an aim. So in leverage, when you say leverage, leverage allows you to use a little money to borrow higher fund to be able to trade. So unlike we see in sports, we're not able to trade with below $10 in sports. But in futures, you can trade with as lower as $5, $3. That's because you have something to leverage on. So here we have, let me take it step by step. We have what's my marker again? So I'm going to pick it one by one. This is what we call, and then I will explain. We have two types of margin in futures. We have cross margin here. We have isolated margin. So this is cross margin, this is isolated. When you come to trade in future, the first thing you ask yourself, am I trading isolated? Am I trading cross? Is a decision you need to make. So when you decide to trade with cross margin, what it means is that, look at my trade. My trade is on cross margin. My position is on cross margin. So what it means is that if you check my position, if I'm running isolated, my liquidation price will not be this far. I'm shorting BTC. My liquidation price is 158,473. I don't know when BTC is going to hit 158,473. And this is because I'm trading BTC. Some other coin, if I were to be in some other coin, you may not see this liquidation price because my risk is very, very, very low. So at this point, I can just go to bed. I can just travel, leave this trade to run forever, knowing that I don't know when BTC in the recent time will never hit this price, 158,473. So what it means is that this margin that is here, so when you are selected, when you are cross margin, what you are saying that when this margin here, when my PNL, profit and loss, so when this price here is equivalent to 112. So as this minus is reading, it's subtracting it from here. So the moment you see 112 here, it will start taking from my balance to sustain this my trade. But if you are using isolated, if you are using isolated here, maybe I can open a trade on isolated and show us. Let me check what I can just guess and open. It's not even looking good to even long. So I don't like trading volatile coin, but for the purpose of this class, let me just open Luna on isolated. So, okay, let me pick. So for every coin you want to trade here, if you come to futures here, every coin that is listed in futures, you can find it here. So this is where you find coins that you can trade in futures. So let me check if I can. So I don't have Luna here. What I have is Lunas. So let me just take it. So I'm going to just long this coin on isolated 5x. $12. So the position is, I've taken a position for Luna. Wow, I didn't even check it was 123. So what it means is that this isolated margin now, this margin that we can see here, once it's exhausted here and my liquidation price gets to this place, the current market price gets to the liquidation price, this entire trade will be closed. Then I will lose all of this 123. So that's what it means if you are an isolated. Look at it here, you can see isolated margin. But if it were on cross margin, then once it gets to this, it will start taking from my current wallet balance to save the trade for me. So this is just a careless trade. So I'm going to close it, close position. So moving on, then that's it about the different type of margin that we have. Then leverage here, this is leverage. So this leverage means, what it means is that if you are on 5x leverage, if you have $10 margin, $10 margin, and you want to borrow 5x leverage. So what it means, if market move by 1% of the current assets that you are trading on, so your profits will move by 5% times 5 of the current market movement, percentage of market movement. So because you have borrowed, if you have $10, you have borrowed $50 with $10. So if the market move by 5%, your current margin balance will increase by 5%. So that's what it means. So the rule in futures is lower leverage, higher margin. So the lower your leverage, the higher your margin is, the more security, the more your asset is secured. But if you trade higher leverage, lower margin, I mean, your fund may not be safe, because the same way that if the market increases by 1%, is multiplied by 5%. That is the same way if the market reduces by 1%, the money you borrowed it reduced by 5%. That's it about futures. So if you are going to be greedy in futures, it means that if you are making more money, when it starts going against you, then you will lose more money. So the thing that keeps you safe in futures trading is when you are able to manage your risk very well. I don't trade more than 5x. Some people wonder why. That's because I want to always be able to hold my assets to recover. I don't want to close at loss. I don't want to do stop loss, but stop loss might be the best option sometime, but I don't like to do stop loss. But some people believe that stop loss is the best. So, but I don't do stop loss. So what I do is I manage my risks. So that's about leverage. So the lower your leverage, if it's possible, you can even do below 5x. You can do 3x, you can do 2x. You can notice that BTC has dropped so far, and you decide to buy it at a very low price then and hold it in futures for long. I've seen some people hold long trade in futures for a very long time. So then this is where the available balance of what you are holding in your assets, what you can access is 3,150. So this is what I can access for BUSD now. I can commit in trade. Now this is limits. If you want to buy if you want to buy currently now, you use the limits order. So here you are meant to enter the price of the price at which you want to buy this. So here we have order book. This order book where we have red and so this is what we call order books. So in order book, you have buyers and sellers. So those who are bidding for sell, those who are bidding for buy. So in futures, one thing I forgot to say is when you want to predict that a price is going to go up, so what you do is we use the terms called long. So for example, at this moment, I want to say that Lunes is going to go up from here. So we use the word called long. So what you're going to use is this button called long. So my page is like this. In ordinary one-way mode, it's not going to show like this, but mine's like this because it's in hedge mode. So this hedge mode allow me to long and short at the same time. Just as I'm holding this BTC now, I want to also take advantage of the dropping longing. I want to long BTC at this moment. USD. So when you are setting up a position, this is where this ruler here is what signifies like the percentage of your wallet balance. So this is, it specifies this percentage of your wallet balance. So when as you move it, I'm using 8%, 9%. So at this point, I want to short BTC, I want to long BTC. So 3% of my wallet balance. So I'm longing BTC from here. So this is hedge mode. A whole lot of features trader does not know these features. So this hedge mode allow you to trade long and short at the same time. So I'm going to show us a trade that I've been holding in my other wallets. I started shorting ETC at 23. Up to now, I'm holding ETC. I started shorting this ETC with $2,000. And with that $2,000, I've made 2,000, like it's now $2,500 because of hedge mode. So I'm running a big loss. My loss is over $1,000, but I have made $500. Now my target is through the use of hedge mode. Once I recover up to $1,000 my loss, then I can close that trade knowing that I have nothing to lose. But you must make sure that you're using the hedge mode properly. So hedge mode helps you to hedge a loss trade. You are hedging that trade against the current situation. For example, if you start hedging this BTC at one with the same value that you have in your margin, like where I have long, I still have 112 in this margin, you will no longer incur any other loss because your profits and your loss will be the same. So at this point, your margin will maintain the same balance. It can never go below this when you're using hedge mode. If the hedge mode is holding the same margin balance, so your wallet, the remaining total balance will remain the same until one of the order is closed, either the long or buy. So you use it to hold a trade that has gone wrong and manage it until you recover. That's the advantage of hedge mode. You can see hold this coin as I am holding this coin now. It's going against me and I will be making profit with the longing. So, but the thing that we need to consider is knowing when to enter the market. I will show us a trade that I've been holding for a very long time, about 3 months now, etc. So I've made $500, waiting to make up to $1,000. Then I would close at loss, then knowing that I've recovered my loss. Let me just close this because I didn't check the charts. So that's it. And if you are placing a trade, one thing I recommend people to do is, now, how have I been managing my futures without being liquidated? I have been making use of maximum. When I say maximum, just like you see here, I have 4,005. Let's say I have 4,000 in my account. 20% of 4,000 is what? Those who do mathematics, 20% of 4,000 is $800. So you see my trade. If I have 4,000 as my wallet balance, in this my trade, some people might say you have enough money, open too many trade. If I open 5 trade now, I will make sure that, try this. I've been trading futures so for some years. I've only been liquidated 2 times. Only 2 times. Other days, I made the decision to close the trade, but when it comes to liquidation, taking me unaware, it has happened only 2 times. The reason is being that regardless of my wallet balance, I'm going to make sure that, where's my marker? I'm going to make sure that the entire margin I have for 5 trades, for 4 trades, for 3 trades does not exceed 20% of my wallet balance. And I'm going to trade with 5x leverage. Let me repeat myself. If you want to remain in the markets, there are things you need to consider: the choice of coins you trade, The choice of coins you trade is going to determine whether you will remain in the market. If you are constantly going to trade top 10 coins in coin market cap, coins like BTC, BNB, Ethereum, Avalanche, ETC, Solana, BCH, and like those top 10 coins that come rain, come sun, the potentials of those coins, the use case of those coins are very solid. And those coins are the coins that they don't pump and dump. They're going to follow the market trend. Like you will hardly see them. They will just pump like Luna, like some of these meme coins that has lower use case, that don't have good use case. You can hardly see them pump like that and dump. It's not like it's rare, in a rare situation, except there is a news or something spike that causes that movement. But if you are constantly trading these coins and you maintain 20% of your wallet balance in as your entire margin with 5x, believe me, before you get liquidated, market would have crashed. Or even if you are shorted, the bull run would have got so crazy or haywire. But if you're always going to go for, like you say, you have $4,000 here, and you want to go and trade with $22,000, apparently you are trading with 50% of your wallet balance. When market crashed, you won't be able to come out of it. There's one common mistake. I've followed many YouTube videos about futures. No one is concentrating on how we can save a trade. You can actually hold a trade as long as you can in futures if you can reduce the percentage of your wallet balance that you commit in trade. Just like we can see here, I am not even trading with up to 20% of my wallet. Apparently, it's just like, will I say less than 1%. Now, look at my liquidation price. Am I not going to go to bed and sleep? If I commit $2,000 in trade as a total margin balance, my liquidation price might come up. Or if I'm trading on isolated. Now, if you want to trade on isolated is also good. So I don't know if I explain isolated, but isolated, when you are trading with isolated, so it means that like you identify, you say, I want to make sure that I am able to risk this 112. I'm willing to lose it regardless of what happened. I don't want to commit more. But while trading with isolated, I forgot to say something. You can add your margin when the trade is going against you. Your margin only reflects in your liquidation price, does not affect your entering price. Let me just open a trade here and show us. Sorry. Okay, select. So now when you're using isolated, if you want to make your liquidation price to come lower here, so you can add margin and you can remove it, add margin. Let me see if take note of my liquidation price. It was 31. So I want to add margin to extend my liquidation price, $100. Can we see my liquidation price has reduced? So you can as well remove this margin that you added. I want to remove this margin I've added. So I have removed it. So you can add margin, and when you add margin, it's not going to affect your entering price. It will only affect your liquidation price, just to save your trade until you recover. So instead of me to add margin, I kukuma trade, I will just simply trade cross margin. So that's it about difference between how you can save a trade using isolated by adding margin. So another thing I want to talk about is once you want to set a trade and you want to observe how much that is being used here as you are dragging this ruler. This is where you see the entire value of USDT that will be in the margin. So this is where you see it. So as you drag this, look at it, is moving here. This is the entire. So once you are satisfied with what you can see, where you have costs, then you can click on either buy or long. So when you are shorting, you use, when you're predicting lower, market is going to go lower, then you use short position instead of long. So here, I have purchased this USDT. Sometimes I've purchased this BTC, and in some cases, at this place where I have size, in some cases, because so that you will not come and see, like maybe you will not see different thing from yours. There are some coins you'll be trading. What you will see here is the number of that coins. Maybe if I'm trading Solana now, I will see Solana, number of Solana that my margin is able to buy. So here I'm seeing value of BUSD instead of value of BTC. Happens in some cases. So what it means is this value here, because I have 5x. So what I have here, 5x. So what it means is that 112 times 5. So that is what gave me this size. So as the price of the asset goes up 1% in my favor, it's multiplied by 5%. So as it goes down 1% in my against me, it multiplies 5% loss. So currently I'm running minus 11%. So in the same way, if we had gone up against this minus 11% is apparently not even up to 11%, but because I'm using leverage, it should be 2% movement or 2 point something movement. That's why, because of the leverage, that's why I have minus 11%. So here, another thing I want to explain is we have funding, what we call funding fee. This is funding fee. Is a maintenance fee that will pay. Two things are involved. Funding fee can go in your favor or go against you. As we can see, funding fee is minus for me. So when it's reading minus, it means that Binance will charge me, and there are specific time they're going to charge me maintenance. It might not even be up to $1 from all my assets. It might be 0.0. It might be cents, but certainly I will pay this fee once it's at the time. Look at the time that is counting down. So in Nigeria, there are specific times that this funding fee have been paid. We have 1 a.m., 9 a.m., and 5 p.m. So as this time countdown, they're going to charge me this from my assets. So, but sometimes we could see it as a plus. So you could see it as a plus. So when it's not reading minus, that means at that time, Binance will pay you this funding fee. Instead of minusing it from you, they will pay you funding fee. So moving on. So when you have a position, when you want to open a position, some people set their stop loss and take profits during initiating order. So just in case you want to set your stop loss and take profits when you open order, while opening order, you activate this. Tap on take profits and stop loss here. Check it. So as we can see, take profit and stop loss. So you enter your take profits, you enter your stop loss here, then you open your position. So where we have at this particular point, we have open order. These are the orders that are waiting to be executed. These are open position, the ones that you can see here. So if you want to close everything here, you want to close all the open orders. Then for open trade that you didn't set your take profit and stop loss, adjust leverage here. For me, I see it like something that doesn't work, because otherwise people will abuse it. Once you adjust this leverage, for example, you are using 50x, you adjust this leverage. Once you adjust this leverage, they will increase your margin. Binance will increase your margin. So it's as much as not even using it, because if you adjust it because you are using 50x, maybe if you are having $5 and you adjust your leverage from 50 to $5, this your margin is going to increase maybe by times 50 or thereabout. So it's not working. If otherwise people will abuse, people will think that they can use higher leverage and at any point they will just come and adjust it. So now, if you want to close or take profits, set your take profits and stop loss while in an open position. So you click on price. When you click on this button, you switch here. So when you switch here, now this is trigger take profits. Once you enter the take profits here, whatever it shows you here is what your profits will be when it gets to that price. Then when you enter your stop loss here, so if BTC gets to 22, please close this trade for me. So whatever it shows you here, whatever it showed you here is what your loss is going to be. That's take profit and stop loss. For example, I don't want to continue this trade once BTC gets to this price. Let's see how. Okay, BTC gets to 20, since I'm shorting, sell for me. BTC gets to. Now you can see initially I was not having this here, but because I've activated my take profit and stop loss, that is why I can see both of them here. So if BTC gets to 20, it will close this trade in favor of me. If BTC gets to 22, 222, it will close the trade entire position, then I will lose a certain amount. So here, if you have any open order that is waiting to be executed, you will see them here. So once they're executed, you want to cancel those orders that you open, then you will close, cancel. So these are open orders that are waiting to be executed. Stop loss or that want to buy ETC at 30, you can just, it will be here. It will be among the open orders. Once it gets to 30, it will peak and disappear from there. Then you will find it in open position. So anything in open position are running trade. So I don't know so far so good. If you have any question, I'm going to quickly show us where we will set our hedge mode. I don't know if you have any questions so far. So far, so good. I don't know if I've been making sense. I just want to know if I've been making sense in the chat box. Please let me know if I've been making sense in this chat box. Have I been making sense, please? I'm going to look at this. How can one analyze chart with MA and MACD? Sure, I'm going to look at that. I'm going to look at that. Okay. So now, to set your trade, if you want to trade on hedge mode, first thing you need to do is, so I don't know, close position, you can use it when you just manually want to close your trade without using the stop loss or take profits. Just close. If I just don't want this trade now, I can just use close position. So let's see if there's anything I'm not talking about here. Okay, let's move on. So to set your hedge mode, first thing, if you have a running trade, we will not be able to set your hedge mode. So if you have a running trade, you have to close it first. If you have not set your hedge mode, you have to close it first, then you cannot set your, so set your hedge mode. So what you're going to do is you come here. Now you see what you normally see that people post. This is where they get it. Where I have crypto queen. This is where I get it. So you tap here. You tap here. Once you tap here, so you tap this place that looks like share button. So once you tap it, then you click on save. So there's also a place where you have to set it to have your name. So moving on, then to change to hedge mode, once you tap here, then you click on preference here. So once you click on preference, then I'm already on hedge mode. I can't even switch to one-way mode. There's no need trading with one-way mode because it doesn't have any advantage over hedge mode. So you just come here. If you are running on one-way mode, tap here to change it to hedge mode. So once you change it to hedge mode, you come back and your button will now be like this. So if it's not in hedge mode, your interface will look different from mine. Your interface will look different from mine. So before so far so good. This is all we have for futures. Like I said, let us maintain the safety in futures is lower leverage, higher margin. Lower leverage, higher margin. If you have $10, you can trade with $2. I'm going to use $1 to open a trade on isolated. Let me see what happened with a higher margin. Let's see what happened. Sure, I'm going to be liquidated. Let me increase my. So this is $55. The higher your leverage, the lower margin you're allowed to use. So if I'm not using 50 leverage, they won't allow me to trade $2 of or $3 of ETC. So you can see this is what I have here. You can decide to play around with it. This is $3. So let me play with this $3 with 50s. Let's see what happened. Long. Let me even check the chart and see whether I can long or short. So let me long it. If you want to trade, if you just don't, if you want to use market price, going to pick any market price, it's going to pick this market price for me. Keep adjusting it, $2. So I'm longing it. Let's see what happened, how it moves. So why it's not even moving is because if you can see, if it was a normal market that is moving, market has been ranging. BTC has refused to go up. It has refused to go down. So that's why you see everything is stagnant. Imagine me holding 51 X 51 leverage, and it's not even moving. Do you see the speed? If it was a moving trend or up trade, the movement will be very. This is because I'm using $1 to trade it. We can see that the percentage is fast increasing. So you can just watch it now to get up to 100%. However, the higher your leverage, the higher your profits, the higher your risk. You can decide to trade. You have $1,000 in your account. So if you must trade higher leverage, if you want to trade 20x, now I'm trading 5x with 20%. So if you are trading 20 X. So what you're going to use is what you're going to use is 5% of your wallet balance. So I'm trading 5x with maximum of 20%. So if you are trading 20x, you are going to trade with maximum of 5%. It will give you the same results. If you are trading with 20x with 5x, and you are trading 20x with 5% of your assets, it's the same thing. You are going to get the same profit. So let's just leave this trade and see what happens in the shortest time. So that's it. That's it about futures trading. So far, so good. I would like to take questions if we have any before move over to the next section. Someone is raising hand, so please answer. Hey, Mr. Nelson, please can you before we move over the moving average, exponential moving average. Mr. Okay, I'm unmuting you, but you are not. Okay, Mr. Daniel, please, can you ask question? Mr. Hello. I'm sorry, my network. Okay, Mr. Nelson, can you unmute yourself?
Okay. Can you hear me now?
I can hear you. My network was very bad.
All right. Sorry, maybe I did not start from the scratch. I didn't get to see the explanation of how to start the trading or how to increase your margin and adjust the risk and co. So I was trying to catch up, but I didn't follow up. So I was like, please, can you just touch one or two, please?
So we recorded the other part of the section is going to take more time. I recorded this section. I don't know if you would mind
Okay.
watching the recorded version later.
Yeah, sure.
Okay.
I'll try and watch it. All right, no problem.
Thank you. Okay, thank you very much.
You're muted.
ask questions. Can we hear me now? I just switched over to another network. Okay, thank you. Mr. Folu, can you ask your questions so that we can move over to the next section that can help us pick trade?
Okay, good
Mr. Folu, can you
evening.
ask your question?
Hello,
Good
good evening. Can you hear me?
evening.
Yeah, thank you for the session
Your
so
line is
far.
breaking.
Can you hear me now, please? Is it clearer?
I can hear you loud and clear, sir.
Okay, great. Thanks for
Yes,
the
sir.
session so far. It's been very insightful. I'm happy to hear that you will be liquidated twice because many of us can't brag the same statistics. And this goes to show that your risk management strategies are really working. I just have a little question that I noticed when you're checking the charts, you go to the market chart as opposed to checking the futures perpetual coin charts. Is there any difference in the two? Would you advise one to check the other charts always?
They are the same, apart from the time that there will be manipulation of price. I know it has happened the last year where you see BTC gets to a lower price than spot price. So that's when you see pure manipulation happening in futures just to liquidate people out of the market. But the charts are the same. It doesn't matter which you use to check the entry and exit points.
All right, thank you.
Is that all, sir?
Yes, that will be all, thanks.
So, Blessed, please, can you ask? Okay, Blessed, please, can you ask question? We have a very important part to learn here. What can help us identify market risk? Blessed, please, can you ask question?
Okay, good evening, ma. Thank you for the opportunity. Please, my
Good
question
evening.
goes, okay, my question goes this way. You said something about maybe you can hold a position for as long as, supposing now a coin is going wide, high, and one decide to short it. Maybe you are shorting from the hoping that it will get down and it refuses to come down. I don't know. And again,
Did you hear me say, hey, let me show you, I'm gonna, okay, go ahead. Go ahead. I will show you a trick. Go ahead.
okay. And only the hedge mode I've not yet understand it. You understand the hedge mode? I think
so I just opened, I showed a hedge mode example. So when you have shorted a coin that has gone haywire, of course, in crypto, it is not possible for a coin to move without retracement. It's not possible. Even if you move for like 2 days, certainly, once the buyers of that coin, once there's exhaustion in that coin, it is definitely going to retrace. It's definitely going to pull back. No matter how much an uptrend seems to look like, how much higher high the chart seems to be making, it must definitely going to pull back. So at that point, what hedge mode helps you to do is, if you have shorted a coin that has gone quite haywire, oh my God. So if you have shorted a coin that has gone so bad, then what you would do is to start hedging it. Once you start hedging it, then you will no longer lose more than you have lost. So I want to show us a coin. So we shouldn't shout too much. A coin that I've held for 3 months. I'm going to share my other screen. I've held this coin for 3 months. Like I said earlier, I started $2,000. I started trading this coin with $2,000. And now currently my balance is 2,500. So what have I been doing? I entered ETC at 23, then that we had more bearish trend. I entered the coin at 23 to short it, and that coin started moving crazily with Ethereum because they are both family. And since then, ETC has refused to pull back to that level where it has entered. So what have I been doing? I noticed that at 30 zone, 31, 30, 31 is a strong support zone for ETC. So what have I been doing? I will set my entering price at 31 for it to long for me at 31. Once it gets to 31, please pick a long trade for me. And once you pick a long trade for me at 31, when it gets to 35, I close this it regardless of whether it's going to keep moving or not. When I close it to add to my profit, let me share my screen and show us. Only the host is allowed. So I'm using my other phone. Let me show us what I'm saying. So I'm sharing my order by other accounts. I'm going to share. Let me show you. So that is how hedge mode can help you save that trade that has gone haywire. So you can hold it until you now recover. So I'm sharing this my Binance. So this particular trade now I've held it for 3 months. So look at it. Can we see this is minus 935 is a wrong trade. But let's look at my wallet. My liquidation price is 64. I'm still trading at 5x. So my margin is 473. That's why my loss is quite high. So let's go to my wallet balance. Can you see my wallet balance here is 2,519. But what I started trading with is $2,000. So now I have set my buy price again at, this is you using hedge mode to save your trade. I've set my buy order at 31. So once this market pull back to 31, it's going to buy this for me. Once it buys for me, it will start hedging. Now this is what is, let me just buy a trade and show you. Let me buy it. At this point that, so, but when you are hedging, I recommend you hedge with the exact amount in your margin so that your profit and loss will be the same thing and be able to hold your losses not more than you have held. So if I open this trade now, for I'm shorting it. If I start longing it, okay, it's USDT. Let me say I just opened $50 long. This is what you call hedging. Madam, can you see?
Yes, yes. Yes.
So, but if I want to hedge this trade currently as I speak with you, I'm going to hedge it with 473. So the moment I hedge it with 473, I will not lose any other money from what I have as my current balance here. This balance will maintain this value. Can never go below here because the one I'm losing out down, I'm getting it back from top, but I'll make sure that I'm hedging. I want to hedge at the current, at the price where, let me show us ETC, why I set my ETC at 31, 33, 31. So look at this price. This is where I noticed ETC has, in the recent time, it has been, this is a strong support zone. It has not broken this. Is within the range of 30, 31. It will just get there. This is where I set it because this support is a strong support. If it breaks this support 30, there's likely possibility that it's going to go towards this entering price. So I know that ETC is a strong coin, does not dip anyhow. Even when BTC is dipping, it refuses to dip. So I just set my entering price there. I don't know when it's going to buy, but I know that this is a strong support zone. So at this point, when you want to look at support zone, we will still get to, you look at the most obvious level. Obvious level. When you say obvious level, prices that are obvious that you see that it has gained support at that particular level severally, or it has gained resistance at that part. Look at this now. If you look at this up here, you see, when you look at this line here, this coin, ETC has refused to cross this because that's the strongest resistance level. So the moment it crosses that, if there was a time it gets to that price, occasionally one or more than 2 times it has got to this price and has refused to move above this. So that's a very strong resistance point. So whenever if it's going to cross this resistance level, it means that we're expecting it to get to 45 support level to a resistance level. So at this point, we'll consider 42 as a very strong support level and resistance level, 42. So the same way you, I'm deviating the same way with support too. So that's why I set my entering price at 31. So I don't know if I've been able to answer your question.
Yes, ma. Yes, ma. Thank you.
Okay, somebody asked what is the advantage of trading before I was kicked out of the Zoom and come back. I didn't get all the questions that was typed in the chat. Somebody asked, what is the advantage of trading BUSD with USDT? So BUSD is like Binance stablecoin. So when you are trading with BUSD, can we hear me? Can you hear me? Okay, when you are trading with BUSD, your charges, either they don't charge, I don't know, easy care. So it's like when you are trading with BUSD, you gain lesser charge than when you are trading with USDT. So BUSD is Binance stablecoin. So sometimes when you trade with BUSD, you are not charged, and BUSD is more safer coin than USDT. So BUSD is a safer, is very safe. You can't, like, we can see a situation where USDC, I think Terra, was it USDC that just crashed? So such a thing can also happen to USDT, but BUSD is quite safer than US. So most of my assets, apart from the current coin I'm holding in BUSDT now, I like to leave some of my assets, I left it in BUSD. So I have different Binance account where I trade. So sometimes I want to trade in different Binance accounts. So I opened with my siblings' name anyway. So that's how I'm able to have different Binance accounts. So the next person, please, we still have a major, Mr. Tosin Kato, can you ask your question?
All right, thank you for the presentation. So I want to ask, do you use trailing stop loss? I think that's my major.
Okay, I've omitted it. I'm sorry. So I use trailing stop loss, 100%. I use it. Once my trade is in profit, I start trading it. So I use trailing stop. So this is how trailing stop loss is. So for this trade I opened here, everybody, you can see at I already have 4%, 4% profits. Now 12 minus 12%. So when you want to trade your loss, once you can see that you're on profit, okay. So this is how trailing loss works. So once you're on profit here, and let's say at this point, I'm already having $20 profit at, let's say at ETC at 40, I have $20 profits. And I don't want to lose this because I don't know whether any fundamentals can cause the market to go against me, because no matter what the technical analysis proved to you, that is why as a trader, you also need to, I shared some YouTube, some good guys that we could follow the last time in my academy group. So no matter where we can get information and some Telegram group. So no matter how much technicals prove to you a trend, a direction of the markets, when fundamental cases comes up, is going to rule out the technical. So fundamental seems to have higher weight than technical. So that's why crypto markets is basically not predictable. Even when your analysis says that market is downtrend, you could see one news will come up like this, everything will skyrocket. You will be asking yourself, is it not the downtrend? Are there not this thing I spotted now? So it is fundamentals that plays more role in the market currently. So to save your trade that is in profit, so when you see a trade in profit and it has not gotten to your take profit, so you click on stop profit and loss. So when you click on stop profit and loss, it's already on profit. So you come here, for example, it's at 40 and you have for $20. Then you can say at 39, close the trade for me. So once you put 39 here, you come here and close it. But meanwhile, I'm giving this is not a perfect trade, for example, because I don't have any trade. I don't have any trade on profit. It would have been a perfect example. So here, if you have market price here 40, maybe your entry is 38. So at 40, let's say you have $20. So what you come and do here is you come here, market price. So when the market price comes down to 20, comes down to 39. So when it comes down to 39, please close this trade for me. So at 39, rather than you losing the entire profit you have made, it's going to trail the profit for you. Then you will now make $10 instead of losing everything. Because sometimes people will, I've seen a situation where I make like $50. I left it with the impression that markets will continue moving or going down, depending on what I'm shorting at that moment, or what I'm trading at that moment. I will lose everything. So it is important that you trail your loss if you don't understand what is going to happen in case you're not in the market. So that's it about trailing loss. So I don't know if Mr. Kainde, can we proceed and take further questions later?
Yes, yes.
Mr. Kainde,
yes, let's proceed.
Mr. Kainde, okay, after Mr. Kainde, I'm sorry for, okay, after Mr. Kainde, we'll have Daniel Femi. I think he's the last question. Mr. Kainde, can you ask your question? Then we'll take the last question and continue. Please, can you ask your question, Mr. Kainde? So go ahead, sir.
Good evening. Thank you very much for the presentation. I just want to ask, how do you change the percentage? How do you change the percentage on your
percentage of what?
US on your trade when you wanted to impute the USDT? I saw it, the percentage was changing, the amount.
Okay, you drag it from here.
But mine is not showing percentage, as in how did you?
It's not, it has to show. I didn't impute it, it's automated. Look at it here. So look at where I drag it here, from here. So as you push it,
yeah,
you will see the, are you seeing the percentage?
I'm seeing it, I'm seeing it.
So why is yours not showing? And it's showing here too. This is, it's still showing here.
Exactly, where you are clicking now, mine is not showing percentage there, it's just the value.
It's showing the value.
Yeah. The percentage is not
you have
showing.
my number. Can we look at it after the section? You can do a screenshot. We can look at it together. Let me find out why.
Do that. All right.
Okay, thank you. So let's take the last question and move on. Daniel, Mr. Daniel Femi, I think you are the last person here. Please unmute yourself. Let's proceed.
Okay, good evening, ma.
Good evening.
I must really commend you on this section. Thank you so much for the time. It's not actually a question. You mentioned a few minutes ago that you shared some YouTube channels and some people that we can follow for some fundamental analysis. I don't know if it's still possible to just put it up so that those that missed the other class can have a chance to be up to date on it, please.
I will need to search for it from my group, so I will do that. Maybe let me drop the WhatsApp group. So if you are not in the WhatsApp group, so you can check it.
I'm in a WhatsApp group.
Let me share the WhatsApp group for those that I will look for it and share again. I will look for it and share. Let me search Academy. Is recorded. Okay. So I'm going to look for the links I shared the last time and paste it there so you can join the WhatsApp group. So now,
okay.
I don't know if I still have the strength.
God will renew your strength.
I'm exhausted, but let's see what we can achieve from here. So I want to talk about this. Let me clear this exponential moving average and this. That's because both of them work in hand. So exponential moving average is a type of moving average. Exponential moving average is a type of moving average. So when we talk about moving average, what do we mean by that before? So moving average is simply a technical indicator that shows the average price of a specific number of recent candles. So before I go to moving average, I would explain certain things to us. So it is effective. Moving average is very, very effective indicator. It just helps you to identify the trend of any markets, whether bearish or bullish. So when you say moving average, when you hear moving average, in average, this is where we'll have the moving average showed here. We have exponential moving average, which is the one that is most accurate. So how do you get this value here? So it is calculated by the number of duration divided. Okay, let me show you how we get it. So first and foremost, before I proceed, as a trader, there is one thing you're going to ask yourself before you start trading. What type of trader am I? Do I want to be? Am I interested in day trading? Am I interested in swing traders? Do I want to be a swing trader? Do I want to be a medium-term trader? Do I want to be a long-term trader? So these are the questions you ask yourself. For myself, I swing trade. I'm a medium-term trader. I don't like to day trade. I only day trade when opportunity calls. Those times you see me post like 50%, 100% profits. They are opportunity that showed up. How do I mean? And you could see those of my result in short trade. So because of the current situation of the market, it is very easy to make profits when you are shorting a trend than making profits when you are longing. So it is easier to make profits from shorting than making profit from long. So I don't day trade. Like I said, I only day trade when opportunity calls. How do I know? Sometimes I could just go to Binance. I want to check the top gainers. Just quickly go to top gainers. Then when I check the top gainers, I don't day trade. If you are day trading, you might not see what you are looking for in these top gainers. You might not see futures coins in top gainers for the past 2 days. It might be the next 3 days that you see it. Once I go to top gainers, what I'm going to look at, I check if I have seen like maybe Solana, Avalanche, or ATC, or those coins, volatile coins too. But I must be careful of trading volatile coins. Could just even do it isolated. Anytime I want to trade Shiba Inu, what I do is I will say I want to risk $100. I will just trade $100 with Shiba Inu on isolated. I will just leave it. So whatever happens to that $100, I set my take profit. I've made up my mind that I don't want to risk more than $100 because as volatile coin can just empty your wallet if you are not careful. So that's why I don't trade volatile coins. I mean, it's not for me. It's even better that you study. There was a time in my group, I used to have, like I have a VIP group, but more like this one is also like it's. What we do is we study Dodo. Anybody in my group here would testify that I took time to study Dodo movements. I would just tell them, hey, place your buy price at this point, leave it. Sometimes it takes like 3 days, but definitely it's going to pick. That's how we're just trading Dodo because we studied Dodo movement. It's not bad if you pick a coin. I trade more of ETC and BTC. I mean, it's not bad if you pick a particular coin. Take your time, study the movement of that candle. When I mean study the movement, find out the most obvious support and resistance zone. And that coin has been moving within a particular period of time. So when you spot out those support and resistance, you wait for it there to short it or you wait for it there to long it. That's just what makes you a perfect trader. Sometimes you don't need too much of technicalities to make profits. I'm not even good at chart pattern. When I mean chart pattern, some people here, when I'm not very good at chart pattern, but the ones I know, I make profit with it. So you must know there's nobody there's no charter or any technical person that knows everything. You don't know, you can't know everything. Either you are good at this one, you are not good at this one. That's how it works. So you can't know everything in technical analysis. So when I see top gainers here, I will just tap on it. The first thing I check, when I tap on it, I will see, okay, what is happening with this coin? First thing I'm going to check, is it resisted? Are there, I don't know, Binance now made it that you can't even initially, you can use, previously you can't use moving average with exponential moving average at the same time. But now you can even turn on the whole button. I think it's recent of imagine using all this thing like this. The thing looks crazy. So what they made it, you can always use one of it. So when you have this chart like this, for example, I have seen this coin at top gainers here. There's my marker. Maybe at top gainers, I spotted it at top gainers. Where's my marker? So our top gainers here. Now, this is 15 minutes. We are not, like I said, you must identify, ask yourself, if this is not an opportunity that I call it, I'm explaining this top gainer because I only trade in one opportunity cost. Otherwise, other days I don't trade every day. So what I do, I'm a medium time trader. When I say medium time trader, I trade within weeks. Maybe in a week, I can trade only 2 times. The reason I trade that way is because I take my time to enter the market. I don't pursue the market. I don't FOMO in the market. So one of the things that key as a futures trader, you can trade anyhow in spot trade, you know. You can just do anyhow, knowing that market will just dip against you and come up later. But in futures, like if you don't manage your risk very well, it will just liquidate you if you trade anyhow. So as a futures trader, you are going to be a conservative trader. Some people said I'm too conservative, and that conservation helps me not to lose my money anyhow. Do you get? So the highest time I have lost, in fact, if I've lost big money in futures, I lost that money trading bots, using trading bots. But if I'm able to manage my trade myself, for me to lose money, it will be difficult, except that market has bottom or bullish has gone so haywire, because I'm a conservative trader. So it takes discipline to be a conservative trader. And the only thing conservation is going to save you from is losing money. And how do you become a conservative trader? You learn not to pursue the market no matter what. If you are going to pursue the market, those you see that they trade with lower time frame, they have like 3 systems in their table. They have 3 systems scattered everywhere. They are just there monitoring it. As the market move by 0.something%, they're trading with huge capital, they close it. So if I see this market here, top gainers, for example, when I check is here top gainers, first thing I'm going to look at, this is 15 minutes. I don't trade lower time frame. But if I see something like this in 1-day view, and I check here, it has maintained a certain, So what I'm going to check is, what are the most obvious, if I want to short this coin, what are the most obvious? So if we can see here, at this point, it rejected the price here, and the same thing happens in the past previous hours. It has done a resistance level here more than 1 places. Let me change to 1 day and see. I'm just telling you, this is a new coin that is a new coin. Okay, listed in BUSD. I think it was listed in BUSD the last 3 days, 1, 2, 3, 4. This coin may not give me what I want. Let me pick another coin. So let's see. Let's assume I meet this coin here. So I meet this coin here, like exponential moving average. And we can use Bollinger too. Exponential moving average could serve as support and resistance level for us. So if I meet this coin here, there are things I'm going to consider. So that's why you don't need you don't need one indicator to place your judgment. So for example, I meet this coin here. I made this coin here. So, and it's in top gainers. Now, what am I going to look at? What is RSI showing me? So RSI here, the first thing I'm going to look at, what is RSI showing me here? So we use RSI to identify overbought and oversold condition of a market trend. This is when I want to take advantage of a particular coin in the top gainer or top loser. So if RSI is showing me that at 1 day view, I don't trade lower time frame. If RSI is showing me at 1 day view that this coin has done above 85% here, it means that it's oversold, it's overbought. However, a coin that is at, we'll talk about RSI another day. A coin that is at 85 does not mean that the tendency of going up is not there. What I'm going to ask myself, at that 35, at that 85, then I will go back to lower time frame and see whether there is a retracement. There is a retracement in that 1 day view. So if at that 15 minutes lower time frame, I'm seeing a retracement. So the next thing I'm going to start looking at is candle closure. So it is important that when you want to enter a market, you don't enter a market at a particular time where a candle is in the middle. What do I mean by that? All candle closures, all candle opens around 12:59. 1 day candle opens then. 30 minutes candle opens then. 15 minutes candle opens then. 10 minutes candle opens then. 5 minutes candle opens then. So if you want to trade scalp trade and you have 15 minutes here, so look at the time, it's 8:35. The next 15 minutes is going to close around 8:45. So what I'm going to do, if that particular candle is indicating a bearish sign, so what I'm going to ask myself, okay, it is also expedient that I wait a little to allow this candle to close. Let me see whether the next candle is going to continue printing a bearish sign. So once the first candle closes with bearish sign and the second candle follows with bearish sign, and then I'm looking at that coin as overbought, then is a confirmation that I can go ahead and short that coin. Look at this candle. Let me show us what I'm explaining. So when at some point this candle moved up to this point. So, but when it closed with bearish sign, it's opened, it rejected this price and starts moving down, then opened another candle. So if this candle here opens with bearish and I wait for it to close and another candle opens with bearish, so it's, and when I look at that coin is overbought, so I can just decide to short that coin. That's not what to consider a load. At that 15 minutes level, MACD would have been telling you that this coin is it's retracing. So now I'm only trying to tell us how I take advantage of a moving market, like a coin that has done so well in the recent time. Now, for us to, there are things I want to look at when I talk about MACD, exponential moving average. So in exponential moving average, I'm just not following the sequence. So in exponential moving average, when you come to set it, when you want to set exponential moving average, so you come here, click on indicator. So I just turn on this tree. I don't do the tree. I normally use, I was checking something earlier. I normally use 2. So this is how my exponential moving average is 20 and 50. So however, anybody, expert can decide to use whatever they like, those who understand the chart. But what does this represent? This represents periods in the candle. This is shorter period, this is longer period. And we could say this is simple moving average, this is exponential moving average. So this shorter time frame, 20, and longer time frame, 50. Let me show us where it represents. So when you set it, so now I'm going to explain moving average before we go to MACD. Let me turn both of them on and see the difference here. So we have different types of moving average. So we have simple moving average, exponential moving average, smoother moving average, etc. But the most accurate one that is used in the market is exponential moving average. So the periods might differ. If you understand how to say, but I like to use 20 days and 50 days. These periods are represented in the candle. So if you look at 15 minutes view, what it means is that the duration of the time that you have turned on, the simple moving average here is the yellow line for me, and the exponential moving average here is the pink line for me. So this duration I set, if you are using 15 minutes, this duration is calculated by how many duration is 20 that I set there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. This 20 divided by this 20 now. The closure, if you calculate the price at which each candle closes. So when a candle closes, the price is not closing at the wink. The price is closing at this place because, so this is where the price of this candle closed here. The price of this candle closed here. It did a further movement, but it was rejected here. So what you're going to be counting is what is being averaged here is the closure of that candle multiplied by the number of duration you use. That's how you get these values here. So, but why using moving average? How can moving average help us to identify the trend of the market? Exponential moving average, that's what we're using with MACD here. So exponential moving average, we could serve as support and resistance zone. So meanwhile, you have to, the best trading time for a good trader, there are appropriate or recommended time. A good trader trades with, like, someone that does not want to get burned in the market. You consider trading with a higher time frame, like 1 day view, 4 hours view, 15 minutes is also important, but it is important that you consider 1 day view, because whatever that is going to happen in other candle starts happening once the candle opens by 12:51, 12:59 every day. So look at what happens in this candle. So this moving average, the longer time frame here, is serving as a support here. It's serving as a support here, but that is not what determines how we use moving average. Look at this. This is the yellow line is a lower moving average, the lower period, while this is the longer period. Whenever you see the lower period, which is 20 days, the yellow one crosses over. Look at where it crosses over here. That is what we call dead cross. If you have been hearing dead cross, this is where you see dead cross. So whenever you hear people say dead cross, this is a pure confirmation that this coin is ready to pull back. This is where dead cross occurred. The yellow line crossing down the longer time frame. However, it is important that you note that it is only the shorter period that crosses down. Whenever the lower time frame, identify the color that is serving the lower time frame when you set it. Whenever it crosses over and start trading below the longer time frame, everything that is happening that period is known as the market is still trading below the bearish zone. Until it crosses it over again, you will not confirm the bullish zone. So once it crosses it over, it is called golden cross. Let's see where it crossed it and see what happened. So look at where we have the dead cross here. This is what we call a golden cross. This is golden cross, exponential moving average, golden cross. So this is what we call golden cross. It crosses it. Once it crosses it, if you watch the chart as it crosses it, it keeps moving. So once it starts diverging, once the strength get exhausted, it starts going down. The market is about to retrace. So once the strength start declining, it's indicating a bearish sign. So as we can see, whenever we see this crossing, the lower time frame crossing the higher time frame, take note, whenever the lower time frame, known as, we will look at it as simple moving average, crossing the higher time frame, it is a sign of a bullish sign. It is a mark of a bullish sign. Whenever this lower time frame, the lower level, lower period rather, start crossing below the higher period, it is death cross. Look at it here. So anything happening below this crossing is known as still trading in a bearish sign. So if you're in a market that is going down and you are not too sure that this downtrend is confirmed, the moment you are able to spot the death cross, it should be enough to tell you stay in the market if you are longing or leave the market. So this death cross is a sign of bearish. As long as it's still trading below this, as long as this lower period is still trading below this longer period, so everything that is happening here is bearish, it's still trading until it crosses it. So he wanted to cross it here, but he couldn't hold. So he crossed it a little here, but he couldn't hold. It started crossing below again. So, and now when we look at this happening to BTC, for the past 24 hours, this place has held a strong support zone. And if we watch the most obvious level, let's see this place, the mark line. Check it, it's not the first time it goes to that price and hold. So it is being resisted. We have it here in this candle, red candle, we have it here, we have it here, we have it here. So until this resistance level is broken, this BTC is not going anywhere. So two things are going to be involved in this. So that's why at this moment, the market is quite indecisive because it has been trading here for the past 24, or getting to 24 hours now. So if you look at it from the lower time frame, it has been ranging. So the exponential moving average, the lower time frame has been holding it as a support. So it has been holding it as a resistance rather. So it has not been able to cross here, even though the other time that we see that it crosses here, but because the higher time frame is holding a very strong support, it won't go above it. That's why it's good that you look at the higher time frame, because it might show you a movement in the lower time frame that is going up. Even the lower time frame, now whenever you are entering a trade, just watch out for the most obvious resistance level. Then when you watch out for the most obvious resistance level and you want to enter that trade, what you're going to be considering is, I shouldn't enter this trade until that resistance level is broken. And two things are involved. Either the resistance level is going to be broken or it's going to start reversing from there. So when we look at it again from the lower time frame, it's just here. It has not said anything. I want you to observe this candle today by 12:51, 59. Another candle is going to open. Let's see whether it's going to do a pullback or a continuation of this movement, because this candle has just been here. It's quite indecisive. Nothing has happened. But when we look at MACD, in the MACD chart here, we could see a signal of, what we're seeing in the MACD here is a signal of bullish movement. But because you don't leverage only on a single indicator to make your decision, it's showing a bullish movement because the MACD line crosses over. So whenever the MACD line crosses over, so okay, let me explain MACD. Why is it MACD here? What we have is, we have three components of MACD. MACD is also used to identify the trend of the market. So we have three components of MACD. So we have the histogram. This is the histogram here. This one is the histogram. Then the yellow line is the MACD line. The pink one is the signal line. These are the three components of MACD. So you can decide to adjust the settings here. So when you come here, if you don't like the color, you can decide to adjust it. This is difference. This difference is the same thing as MACD line. D is different. Is the same thing as the signal line. So shorter period, these are standard period of time that we use. You can, if you understand, whatever period you have here is represented in the candle. So each of the candles stands for one period, depending on the time frame that you are viewing. So whenever the MACD line crosses the signal line, it sends a bullish signal. Whenever the MACD line crosses below, let's see what it happens. All the time that the MACD line, whenever the MACD line crosses, look at this, whenever it crosses the signal line and goes above the histogram, it's a pure bullish trend. It's trading within the bullish zone. Look at it here. So just where we have MACD crossover, we also have exponential moving average crossover. So these two indicator momentum confirmed the direction of the market trend. Look at it here. There is a crossover here, and there is a crossover here. So whenever there's a crossover of the exponential moving average, the lower time frame is a sign of bullish trend. And whatever that is trading above it, it's known as bullish trend. So whatever that is trading below it is known as bearish trend. So now look at how this MACD crosses, as it's crossing the signal line, as it's crossing the histogram. If you watch the chart, it keeps moving up. Now what happens? Let's see what happened. The moment the strength, because at the moment the strength of the MACD line start declining, it's signaling a bearish sign. So when you see a support, when you see a coin holding a resistance and the next candle is printing a bearish candle, you must see the instance here. You must notice it here. The strength will no longer be pointing straight. The strength will start declining, start bending. So once you want to enter a coin, you want to confirm the reversal or retracement. So instead of it to continue shooting up, it will start declining. As it's declining, it's crossing over the signal line. As it's crossing over the signal line, the market is dropping. As it's crossing over, the market is dropping. As it's crossing over. So as it crosses and crosses and crosses and is about to cross it up again, you will see that. So just take your time and follow this chart. Check all the time that we have MACD crossover. That's, take note, signal line is the pink one, MACD line is the yellow one, and what crosses is the MACD line for MACD, moving average, convergence, divergence. Then what crosses for exponential moving average is, the shorter time period, which is the simple moving average. So, and this exponential moving average, we can see it serve as support and resistance zone. It's sometimes when price gets to it, it holds a support, and when price gets to it above, it's when it's crossing above and a candle gets to that, like just like we can see here. So it was holding here as a resistance. So it also serves as resistance level. So when you are trading and a MACD exponential moving average is holding a coin here for moving up. So it's also important that you keep calm and wait for the resistance level to be broken, either ways or up, either up or down trend. So two things that MACD can work for us, exponential moving average can do for us. They serve as support and resistance zone. They could also help you to spot the trend of the market by the crossover, exponential moving average crossover, either the dead cross or the golden cross. The golden cross happens when there's a bullish trend. Then the dead cross happens when there's a bearish trend. So during the bearish trend, the lower period crosses down the higher period. During the bearish period, the higher period crosses above the lower period crosses above the higher period. While here too, in the MACD here, the MACD, the MACD line crosses above. When the MACD line crosses above the signal line, is a sign of, is a signal, it signals a bullish sign. When it starts declining and start crossing below the signal line, it signifies a bearish trend. So at that point, you should be careful with your trade. So one thing I want to say is, you know, when you want to look at, like I talk about support and resistance, it is very simple for one to identify what works for one and maintain it. Support and resistance, so there's nothing that they only help us to specify price points on a trending chart. So where we can see a lot of buyers and sellers. So when we talk about support and resistance, so it's a point where you can see a lot of buyers and sellers. So also a level at which an asset stop rising or stop rising or stop dropping. So when you say this is a support zone, it means that at this point that this price gets to, it stop moving down, is a support zone. So when you check out this place, it has held this support for one to the same support. It's called the most obvious. That's the one you can see clearly. It has hold the support in this time frame. 4 hours, it has hold another 4 hours. The past 4 hours, for the past 12 hours, it has been holding the same support level. That's the price at the point where the price, where we could see that the sellers' strengths have been exhausted and the market is likely going to rebound from there to uptrend. So at the resistance level here, so we see a point where the holders, those who are holding, maybe we can witness more of sellers. The strength of the people buying strength of traders is no longer as strong as it's were when this candle was. So at that point, there is tendency that market is going to start pulling back when it's holding a strong resistance. So, or probably you could say is at the equilibrium point where we have the same buyers at equivalent as the same sellers. So that's where you see a market is ranging at that particular point. The strength of the buyers and the strength of the sellers are equal. So whichever bids, whoever that bids higher or bids lower, like if we could see more buyers here by tomorrow, when the candle will open, if we see more buyers here by tomorrow, it means that we'll get more uptrend movement. But if we see more sellers by tomorrow, it means that the market will start dropping. And just like we could see this shorter period, it could also hold, is even sitting at a support level. So when it starts dropping, it's going to hold this support here. When it holds this support here, so if you want to enter this trade, you're going to wait. If you have not entered before it gets to this place, you're also going to wait for this support to be broken before you start trading it down with. So that's it about how we could combine exponential moving average with moving average convergence divergence. So I don't know if we have any further questions so far. So please, I would like to take questions. Meanwhile, before I take questions, I don't know if I've been able to, I don't know if I've been able to communicate or add values, or I have been talking to myself all this while. So I just want to know if I have been able to communicate so far, even though I have been rushing the class. I just have been rushing because I'm exhausted. I'm quite exhausted. Okay. So this is not all about how we could also look at next time. We could also look at RSI. So I've seen people trade with only RSI. Some people trade with only RSI. But if you are going to be trading with only RSI, what you're going to be considering is only 1 day view or 3 days view. So you could extend your view. So maybe in our next class, we could look at how we can comfortably trade RSI. Like in summary, before I take question, before you enter any market, please, when that coin is moving, please, it is important that, like we see in this place, each candle represents 1 day view. Each candle represents 1 day view. Each candle represents 1 day view. Just like we have seen here in this candle 1 day view has been here, it has been stagnant, it has been ranging. Like I said, the MACD here, MACD moving average convergence, is showing this thing as a bullish, there is a bullish flag here in the MACD. But that's why you don't need to leverage on only one indicator momentum. The MACD alone is showing that we have a bullish flag here. However, in as much as it's showing a bullish flag and the price has gone up, it is still trading below the bearish zone. That is why you need to be careful. Any trade that is happening below the histogram, whatever that is trading below the histogram is considered as trading like trading on the bearish zone. Whatever that is happening, whatever that is happening around this region where we have the lower level here, lower period rather, where we have this exponential moving average line, the shorter time frame, whatever that is trading below is a bearish zone. So take note so that you will be careful when you are trading. So anything happening below this crossover down, why the lower period crosses down is bearish, no matter how the thing moves. So why this MACD signifies a bullish sign, we could see that it has held a strong resistance here. It has not moved. So you might just likely jump into this market because you saw that moving average convergence divergence is converging, is showing a bullish sign. And at the end of the day, you get bonds. Maybe tomorrow the candle opens now and it start opening with a bearish sign. So what will happen is that you have made a wrong decision. So the best thing to do is you could be patient and see what happens when the 1 day candle opens. So when the 1 day candle opens, you can see what happens again. So at that particular time that 1 day candle opens, all other candle will open with it. 5 minutes to open with it, 10 minutes to open with it, 15 minutes, you could see what happens then and make a decision around your trade. But at this point, this is an indecisive market because it has been ranging within this time. So the moving average alone is not enough to make a decision. Neither is any of the indicator momentum is enough to make a decision. So the price action here is still, it has been ranging here. So when you hear price action, it's simply, there's nothing special about price action. It's just the action, the movement of that coin or the price, the direction of that at that moment that coin decides to go down or go up. The price action, the action taken either up or down. That's when you say price action. Price action is what happens to that particular candle closure. At that moment it held a support or resistance. What happens to it? That's when you see price action. So this is important that you consider support and resistance zone. So this coin has held the most obvious resistance level. So if you want to enter this coin long, you'll make sure that it breaks it up. But for some time now, it has been trading within this zone. So when it breaks it, when you say confirm a breakout, so when it breaks it now, you could say we might likely see 23. And Binance, like we know, usually have some hidden supports and resistance zone. So look at Bollinger Band. So you could turn off other indicators. When you turn Bollinger Band, see Bollinger Band is also holding a resistance to this candle from moving further. So all of this indicator, Bollinger Band, exponential moving average, which is preferably used, can serve as support and resistance. So, and I'm very sure that by the time this candle gets to this place, before it crosses it, it held a resistance. So when it crosses it, it moves further. So always pay attention to the level where this indicator momentum holds the candle. If it's holding it downward, just see what happens here. It's Bollinger Band, but it was holding here. It did not break it. As it did not break it, it started reversing from here. So it's also can be used as support level. See it here where you have the candle sitting at the Bollinger Band. So it's seated here and it didn't break it. It touches the Bollinger Band and start moving upward again. So the Bollinger Band here has served as a support level for this candle. Then when it gets to this place, it's possible that it held it for a little time, because if you watch here, it has traded here for some time. So it now broke it. So, and I know it didn't just break it. It must have ranged in the other lower time frame before it breaks. So as it breaks it, it started moving up. So if you also want to trade this, scalp this trade at that moment, you could also consider it breaking it. If you meet it here, wait for it to break it. So at this point now, this Bollinger Band, I didn't turn Bollinger Band when I was talking about resistance, but Bollinger Band also confirmed that it's also serving as a resistance to this candle. So until it breaks it, and the moment it breaks it, we might see 23 here. So, but for now, let's see what happens by 12:59. You could just check it out. So just a quick one. Let me quickly run a summary of how we could combine all of this to make. So when you want to trade, let me just quickly talk about RSI so that it can help us to also combine it and make decision around our trade. So this is RSI, the best time frame to use for RSI. When you turn on your RSI, let me just turn all of this. So RSI here is 14. 14 gives you the most accurate time frame here. This is where you have your RSI. So this is your RSI here. So when you come here, you can just adjust it. 14 is the most accurate. There's no point using all of this RSI 1, RSI 2, RSI 3 is not necessary. The most accurate RSI is 14. 14 period of days. So when you are saying RSI, this is 14. If it's whichever view you are using, if you're using 1 day, it's 14 days. It's calculated by 14 days. If you're using 4 hours, number of 4 hours into 14. So, but the most accurate RSI is 14. That's what most expert traders use. So set it to 14, turn all of the other ones off and use the 14. So when the RSI here, if you want to trade only RSI, let's say you want to trade only RSI, you don't want to trade every other indicator, whether chart pattern or other indicator momentum or trend line. Some people also do trend line, which also serve as support and resistance zone. I don't learn how to draw trend line very well. So when you have RSI here when you have RSI here for 1 day, and the number is showing you RSI 14, the number here is showing you for 1 day. If you want to trade RSI alone, it means that you're not going to be trading every day. For 1 day, the RSI says 30 or below 30. You could divide your assets, like if you have $1,000 in your wallets, futures wallets, and you want to trade RSI at BTC at 30, at lower, lower high at 30, then you could divide your asset that you want to trade into two. Maybe you want to trade with 20% of your $1,000. You can divide it and trade with 10% and buy long. If you continue to drop further, because RSI at 30 can still go below 30. So RSI at 30 shows oversold. It means that the entire market is exhausted from selling. People that are selling, they are tired of selling. So at that moment, the market is likely going to reverse to uptrend. So you could also confirm all of those things with all these indicator moments that we've looked at. So you could buy, when you buy with half of what you have, then when it goes further below, you can also buy more. But at 30, 30 is already oversold region. Then you can long from there. And if RSI here is showing you 85.90, if you come and see RSI here at 1 day is 95, don't fail to short that coin. Once you see RSI, it has happened to me occasionally. You see a coin that has done 95 RSI, you are very lucky. You must be very lucky to meet an RSI in 1 day view at 95. If you miss shorting that coin, honestly speaking, you have missed a lot. So once the RSI shows you 85 and you're lucky to even see it at 95, please start shorting that coin immediately. Can even short with 10x, but I don't do 10x. But once you short RSI at 95, it's not going to go above 100. It's not going to go, but I've not seen RSI go to 100 before. I've not seen RSI go to 100, but once you see that 95, 98, take a trade of shorting. So once you see it below 90, take a trade of long. And if you want to trade RSI alone. So when you're taking a trade, at this particular point, you have RSI, that the market is already oversold. You will never get liquidated. If you observe the risk management level that will land, trade with 20%, and you enter a trade at RSI at 30 or below 30, you start longing a trade, you will never get liquidated, never, if you follow what we have learned. And if you start shorting a coin, RSI at 90 above or 90 and above, you will never get liquidated, because at that point, that coin is exhausted. It's going to retrace. So at this point, I would like to stop here and take further question. I'm already exhausted. So those who have questions can ask, or do billions. Please, can you unmute yourself and ask question?
Hello, can you hear me?
I can hear you loud and clear.
Yeah, good evening. Thank you for the lecture. I wanted to ask that indication of dip, that dip that shows the green and the red. What does it mean?
Okay, sorry. I'm talking to you guys as some people that have a little knowledge. So the red candle means a bearish candle. The green candle means a bullish candle. So when you say bearish, it is a point where the price of assets start dropping low. When you say bullish, it's a point where the price of a particular asset you want to trade start going up. So I could also support us with some questions in the group chat. You can try to do something and I will ask questions that I could. We don't learn everything in a day. So it is by practicing, you ask questions. And if you are active in the group, ask questions. There are a lot of, in my group, in that academic group, there are a lot of expert traders that know better than me, just that they don't have time to always appear in this part. There's also someone in this group chat, in this call now, that know better than me, but for some reason he's not able to say anything. So if you are very active in the group, trust me, you're going to learn a lot. So many people, in fact, you will learn more than you can imagine. If you are active, just try to do something, ask questions. So the Rome was not built in a day. We didn't know everything that we knew now at once. You just have to start making a trial to trade. You can even start with $5. Let's see what happens to that trade that opened earlier. I know I would have been liquidated by now with higher leverage. It's still there, 50x, and I have not been liquidated. It's still there, but it's getting to my liquidation point. So that's what it means. It means a bearish candle and a bullish candle. So we could do a beginners class where we could start showing how you can place a buy order in spot trading. So these are some important, most essential part that you need to know. So red candle means bearish candle. Green candle means.
Can you hear me? I think like
Yes, I can.
you're getting it wrong. Like, okay, when you go to either you're checking the chart of a particular coin, yeah, after the times and everything, you see depth there. When you click that depth, there's always what we call bid and ask. When you're bidding and
Yes,
they're
bid and
asking,
ask. Yes,
yeah,
yes, bid and
okay.
ask.
Sometimes like you see the green one always go up and the red one always go down. Sometimes like
Okay, is
maybe
that what you're asking?
yeah, that's what I'm asking, not the other
You
one.
mentioned candle. You mentioned candle.
No,
That was why I'm.
no, I mentioned deep. I was mentioning green and
Okay, is
red.
this thing that you are saying?
Yes.
So when you want to buy, when these are bid, I think let me use spot trading and explain better so that we could understand it better.
Okay, I'm here.
So here you have the red, although the red is also, when it's in red, it means that it's dropping. When it's in, you can see 38.4, this is the current market price, 38.48. So red signifies, is a different, this thing that you are seeing changing from red and green. It has a different interpretation with these people in red and green. I hope you know. Can you hear me? Hello? Mr. Odubillions, I said, I hope you know there's where you have the current market price. What you can see here is the current market price.
Yes.
Wait, oh, you can't see, my screen is not showing.
Your screen is not showing. It's not showing.
Yes.
Mm.
So I hope you know where you have this thing you are seeing is different from what is happening here. This is current market price.
Yes.
If you want to buy a coin currently, now these people are people bidding. They want to sell. These people, they want to sell for you. These are the bidders. These are people that are asking. They want to sell to you that want to buy.
Okay.
Do you get? So
Yeah, I'm
when
getting.
you tap this price now, for example, you want to buy, you don't want to set a limit order. You just tap on this number one price and enter the amount of USDT you want to buy with. Immediately the order will execute if you tap any of this price, because the person that wants to sell to you is there. Now, if you call them B, these are the asks. Then if you want to sell what you have, the people that want to buy for you are the people buy from you, are these people that are asking from you. They are the one in red. So once you click the sell, you want to sell, then you tap here. You want to sell, you tap one of it. and enter the amount of someone here will buy from you. So where you have this price changing is the current market price of that assets. And it changes in red, green as the price fluctuates. If the price moves up, it changes in red, in green. If the price drops, it changes in red. Have I answered your question?
Yeah, okay, you have answered part of it, yeah.
No,
Don't
let
worry,
me
yeah.
know if you are not clear. No,
Mhm.
let me know if you're not clear.
Okay, what I'm trying to say is you check like if you're
Okay.
taking a line 15 minute, 1 hour, now the dip here now, if you click that dips, there's always like a valley down of the red and the green. Now, in you check indication like okay, there's a battle between the red and the green. We'll be able to
Of
push,
course.
yeah, one out and one in. You see, if you're checking a particular coin, you see the other one is doing at maybe at 5, the other side is doing at 5 point something dollar, and the other one is going down at 4 point something dollar. And you check under the green, you're seeing numbers that are running like
No.
okay, it's just like
Yeah,
the numbers of block that are being sold. That's what I think. Shall I just based on my
you're
own?
getting it wrong. You're getting it wrong. Honestly
Okay.
speaking, you're getting it wrong. So these are you need bidders and acts. You need buyers and sellers for an order to be executed. I don't know how you learned that. You need buyers and sellers for orders to be executed. And order books, in decentralized, we make use of, we see where in decentralized exchange like Pancake Swap and Dex, you see they provide liquidity. So there's always liquidity for that coin to be able to trade. And liquidity in centralized exchange are seen in the order book. So these people are the people that provide liquidity for this trade. So, and
Oh,
for this trade to happen, for there to be a successful execution of any order, there must be buyers and sellers seen in order book. And order books are where you have the buyers and sellers, which is what we can see. Those in the red are known as acts. They are asking why the bidders are those. I think there's a place you even see it mentioned specified, ask and bid. Let me see. I think there's a place you will see ask and bid.
is there?
Ask
What
and bid.
answer bit is in that place I'm telling you, I'm explaining to you. Okay,
No,
when you
I
see,
mean there is a place where you see it written ask and bid. Where are you explaining to me? Is
okay,
it
now
in the
when
charts?
if you get to the chart, where you click in the chart, you see line number D
Hey,
more.
look at it now. The ask and bid.
That's
Yes, look at it. Look at
that's
it
what
here. Look
that's
at
where I'm. That's now you have really clicked where I'm talking about now. That's
you would have said
what
the charts in the charts. These are the same. These are also order. This is order book too. They are the same, just like it appears in the chart. Look at it now. It's written order books. Are you
yeah.
not seeing it?
I'm seeing it. I'm
Order
seeing
books contain the bid and the acts. The acts are people that want to they want to buy from you that are selling. Then the bid are the people that want to buy from you that want to sell to you. Do you get it? Those bidding want to sell to you. Those asking want to take from you, like you want to sell your asset. Those asking want to pick. So these are the price that they have put in the market. I want to buy at this price. They are not buying at any price other than what they have put in the market. These people, these are also the price that if you put anything that is not in this price, the order will not execute.
yeah.
It won't execute. If you go
Okay.
and put anything that is not in this price, the order will not execute.
Okay. What about that trading data? If you click the trading data, bring medium sell.
Is the total volume? Yeah, the trading data is plotted in the charts. Small cells, these are the let's say the inflow and outflow, money flows analysis in the markets, the way it's plotted in the chart. Large orders, medium orders, small orders, total orders. These are the volume that entered in the markets, money flow analysis.
Okay. Thank you so much. I do appreciate.
You're welcome. Please, so please, let's take questions from Mohammed. Mohammed, can you ask your question?
Okay. Oh, good evening, ma.
Good
Hello, can
evening,
you?
sir.
Yeah. May God reward you
I can hear
abundantly.
you. Amen.
You have really done a nice work to us. So for me not to stress you much, I wanted to confirm regarding the exponential moving average, the EMA. That is EMA
Okay.
20 and 50. So you can't candle stick, and you talk about dividing. So I didn't really get that particular area when you count the candle
So
under. Yeah, I can hear you.
It's just to show you, some people ask, yes, this is not when you say average, exponential moving average. It's just to show you that this average is being calculated by the number of closure of a particular candle according to the period. For example, this is 20 days. 20, not 20 days, this is 20 period. And this 20 period, it could be 20 period. They hire some expert traders, they hire the time frame. Like if you want to view with 3 days, 1 week, they're going to reduce this shorter time frame to like 5 and reduce this one to like 10. So the higher you view, the higher time frame you consider to use, the lower the value should be. So this is what I mean. Look at it here. You will see it. I'm showing you how this value is gotten. So you see this value that we have. Some people can even trade only one exponential moving average and use 10. Some people say 10 exponential moving average when you're using only one line shows you a very accurate support or resistance. Let's do 10 and see what happens. 10. Oh, I didn't save it. Let's do 10 and see. Some people will say 10 is preferably, but you can't get the crossover when you are using the 10. So you can only see when the crossover happens. So you see, some people say they want to trade only 10 exponential moving average. This is it. So this 10 exponential moving average means for 1 day, how this value is gotten, this 36 that is here. Where is my map? So this 36 that is here, how it's gotten is you calculate, yeah, we are using 10 days, 1, 2, 3, where the candle closed or not where it's rejected. There's a difference between where price is rejected and where candle closed. So this is where this candle closed here. If you can see, this candle closed and closed there. This is where it closed. This one is where it's rejected and it pulled back. So you're going to consider this as a candle closure. And if you look at it, draw it, if you tap this place, it has closed here within a certain period of time. So we could not see more buyers here. That's why it's rejected it and start pulling back. We could see more sellers here. You get, so we could see more sellers here. That's why I rejected it, but we couldn't see more buyers. So, and it's not just the first time it happened. So this is, if we see only 10 days, it was holding support here. Each time the price candle touches it, it will bounce. Each time the candlestick touches the exponential moving average, 10 periods, it goes down, it goes up. Each time it touched, it was serving as a continuous support, support for this trend. And it could also serve as, look at it, also serve as a resistance here for this. So people will want to trade only, want to turn on or set their exponential moving average line with only one. Me, I like to do two because that two helps me to know when it's crossing. So that is, so you calculate 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's 10 that I'm using at where the price is closest. You might not get it statistically, but I'm telling you how this value is derived. So when they calculate, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's divided by that the price of, if the price of, let's say we have 30, 31, 28, 29, 20. So you divide it by 10, number of that period. That is how you get this value.
Okay.
So and the best, the recommended time frame for the crossover, and we could do like 20 and 50. I think that is what works more for me. You could do anything, no. It's not like you can just do 20 and you can decide to do 5. But this is what works for me. So anybody have what works for them? I don't know if I've answered your question.
Yes, ma, you have answered. Thank you very much.
All right. So Mohammed, okay, yeah, Mohammed. Blessed, you have a question. Can you ask your question?
Yes.
Blessed, please.
Sorry.
Okay,
Yes.
madam.
I have a question. If
Go ahead.
I'm trading RSI 95 1-day view, and the maybe, and I'm shorting it, but unfortunately, fundamentals, that is, if there is any news and the market starts going up, what can one do?
That coin will no longer respect that's fundamentals, because it is time to retrace. Even if it's going to continue the movement, it's going to retrace a little before it continue moving. So if you have started shorting at 95 and there's a fundamental, you should have made profit before it starts continuation of the movement.
Okay.
The RSI cannot go above 100. It has not even, I've not seen it. I think I've seen it at 97. I've not seen it at 99.
Okay.
So
okay.
for that particular coin that has done RSI 95, if you watch any coin that has done RSI 95, it may not be moving with other coins. It's just moving on its own. Maybe there's a fundamentals that moved it to that point. That's how you get those coins.
Okay. At what number is the, as in, can one start shorting a coin apart from 95 and 85?
So at resistance level, if a coin is at 85, look at it here. I've mentioned if a coin is at 85 and it's here, just like it's here, and you see that this place has served as a support, a resistance level for some days. The most, like I said, the most obvious, when you say obvious, look at it. It has happened, it has happened, it has happened, it has happened here. So this is considered to be a strong resistance level. So at this point, if you want to short this coin, it is also important that you wait. Maybe like this coin now, when it got here and rejects, like when this candle opened, it moved up and started dropping. It was moving up. It's just, see, where you see this price, it means that at some point it got to this price. It got to this price and start pulling back. Do you get? So
yes.
What you're going to do is, at that point, you want to short a coin at 85. What are you going to ask yourself? At that 85, is that coin resisted? Is that coin, are there anything that's going to stand as a bottleneck or a barrier ahead of it? If there's nothing standing as a barrier ahead of it, there's no point. Okay, I could give us some example in the group when I'm trading a coin at a resistance level, maybe as we move on. I will show us when I'm trading a coin at a support level, I will show us too. Do you now understand? So when you are trading 75 RSI, 80 RSI, you have to know whether is resisted. You want to short it. If you are trading 30 RSI, 25 RSI, is it resisted? Is there any support? Is it sitting on a support? So if it's not, that means there is no point. So two things must happen for a coin to bounce back. Either is holding a support for it to retrace up, or is holding a resistance for it to retrace down. Two things. It has to be resisted to retrace down. It has to hold a support to bounce back. Have I answered your question?
Yes, ma'am. Thank you, ma'am. God
You're
bless.
welcome. So, Mr. Tekno, can I take your question?
Good evening, ma.
Good evening, ma.
Okay. Thank you very much. You've done so well with the lecture. May God strengthen you and enrich you. My question so far, you're welcome. My question so far is on the MACD. The question I want to ask, look at the MACD indicator now. The signal line where the thing show the crossing confirmation of bullish and bearish signal. The candle at some point, I will not call it, let me just use candle for example. You see a hollow candle and a solid candle. Is it that at the point where we see you start, if maybe the market is becoming bearish, coming down, you find out that the candles are solid. At the point the candle becomes hollow, is it that hollow aspect is a confirmation that the trend is about to change? Because the thing becomes hollow, then start declining gradually before it crosses over again above the signal line. So that hollow and solid kind of candles we keep seeing at the MACD signal line area. I want to understand the difference between the hollow
Do you have a particular, which chart did I use so that I could point the candle? Is it in this chart? Can you see my screen?
I'm seeing your screen.
Now, okay, remember what I said earlier, that at a point where some of this indicator momentum, I said it earlier, that when an indicator momentum is confirming a bearish or a bullish sign, it is expedient that that candle that is moving at that moment, watch it to close and open. Do you get my point?
Okay.
Let me show you, for example. At this point, look at what happened there. Candle closure is very important. You cannot trade without observing candle closure and opening. It's not possible. Look at what happened here. At this moment, there's a crossover here. There's a crossover, and it's showing at this point where we see this crossover here. If you notice, there's a little decline, but it continued again. So as it continues, look at this candle closure, this particular candle. Can you see?
Yes,
as it closes here, what happened? It printed another bullish candle.
Okay.
So if you meet this coin, for example, in as much as the MACD line has sent a bullish signal, it has sent a bullish signal already, and maybe you come to meet this trade where this candle is halfway here. I don't advise you to enter this trade here. Do you get my point?
Okay.
I advise you to, let's say 4 hours view. Let me see what happens. I advise you to, if you are going to enter this trade here within a lower time frame, you should scalp. You understand what it means to scalp? You just scalp that trade. But if you want to buy and hold that coin without knowing what reaction the next candle open is going to give, it is not advisable. So you need to understand what happens. And you can't confirm a candle opening within 5 minutes of it. At least if the first 15 minutes has closed. By this time, this candle opened like this. If you watch, the first 15 minutes candle would have done like 5 uptrend movements, and you could confirm it from the higher time frame. Then you can trade the market. You can just scalp the market and come out of it. Already, I don't trade this. I don't trade the market in a bullish. I don't trade the market when it's moving already. No, that's why I say you don't chase the market. So anybody going to trade this market here is chasing the market. How about you entering the market when it's still below here, when it's here? Have you asked yourself? I don't chase the market. So if you want to chase the market, make sure that you're going to scalp it and just set your entering price, your take profit very close so that you could just come out of that market as soon as possible. So if you want to chase the market, but I don't chase the market.
Okay. Lastly, I want to ask, is there any way one can use a Fibonacci retracement to determine support and resistance using the Binance chart?
Yeah, Fibonacci. No, it's not in. I know Fibonacci is very accurate signal, but it's not in Binance.
Where can I get it?
I saw it in one chart. I was going to ask where we could use that Fibonacci retracement. Maybe the next class I could advise. I've seen it. I've seen a video about Fibonacci, but let me also find out and get back to us in our next class. I know Fibonacci. Okay. I know it's a very good accurate.
Okay, Mas. Lastly, I would just plead with you, even if you're using a trading view to teach us, if you can just touch this topic called, I really want to learn how to use Elliott wave principle. Elliott wave and Fibonacci. Fibonacci, I know, but I can't find it in Binance. But Elliott wave, when to know when the waves are forming, and when to know the longer wave, the AB, and the retracement or correction wave. Even if I know it may not be in Binance, if we can get it in trading view and you can explain it to us, because we can view most of these charts.
Are you in my group?
Yes, ma'am.
Can you see I've been liquidated? That $1 chart has been liquidated. Look at the alerts here. Okay, margin call. Let me check. But it has been liquidated, but that was just a. So okay, I will get back to you on that. You can chat me on to remind me.
Okay. All right. Thank you very much.
You're welcome. So Jehu, I think you are the last person.
Thank you very much, Crypto Queen. Your class has always added value, and I've really learned a lot. Thank you so much. God bless you. The question I want to ask somehow, you touched it somehow, but I still want more explanation. That is about the candle forming. How can one accurately determine when the next candle will form? Is it by counting? If, for example, I'm using 4 hours duration, is it by counting from 1 o'clock to the present time?
Okay. Okay, 4 hours candle. I didn't mention it. 4 hours candle begins by 1. Let's say, like I said, each candle opens by 1. So you're going to count from 1. The next candle, 4 hours, is going to close by 5 a.m. If you're using 4 hours to determine your entry and exit points, first 4 hours opens by 1. Second 4 hours close and opens by 5. Count another 4 hours by 9. By 9. Another candle, like it opens and closes by 9. Then another one will open and close by 1 again. That's how you count it.
Okay.
So if you want to wait for, let's say you are trading, but however, if you want to use 4 hours to enter your trade, take note. whatever that will happen in 4 hours is also important that you look at other lower time frame. Whatever that is going to happen in 4 hours, just to confirm, it will start happening in 1 hour first before it happens in 4 hours. So that's why MACD here, they are here to help us also. So whatever that is going to happen there's a screenshot I took. I wanted to show us. There's a screenshot I took. So CBTC here, I took this screenshot around 8. This is 4 hours view. If we see the MACD, can we see the MACD signal line declining? Can we see it?
Yes.
So let's see what happens. Let's see where it is by now. This is BTC 4 hours view. Let's see where it is by now. Let's see whether the MACD was able to. Have you seen? Why is it showing different? So this is 4 hours, sorry. So 4 hours here is still like I don't know why I'm so optimistic that markets will drop. It won't go further. I don't know why I believe that, but the MACD is showing a bearish sign from the look of things in 4 hours view, because why the in 4 hours view, why the exponential moving average is still trading on a bullish zone, but the MACD here has already sent out a confirmation of bearish sign. So if it's going to continue up trade, it means that this line will not go further down. It will just change direction. Well, let's see what happens. I want us to check out this trade by tomorrow and see what happens. When we're checking out the trade, we should also check MACD and see what happens with it. It's going to help us to understand it better. Let's see what happens in 4 hours view. In the next 4 hours, which will be by 1, let's see what happens to it and see what direction the market goes and what MACD says. So when I say you wait for candle to close, it's just to wait for this candle. This candle has been here. All the candle 4 hours, it has been ranging. So it's just an indecisive market. The buyers and sellers are just busy. It's just at the equilibrium point where the sellers and buyers are even. So they are just there. So whoever beats the market trend wins. So if we see more sellers by earlier today, that means the market will continue dropping. If you see more buyers, that means the market will move further. Have I answered? So at this point, it will be nice that you wait for this 4 hours candle to close and open by 1 o'clock today and tomorrow.
Thank you very much. It's understood.
So I think in the absence of no other question, so I want to believe that I don't know, Easy would have been able to talk to us, but for some reason he can't say and he can't talk at the moment. So I want to thank everyone who stayed to the end of this webinar. Okay, we can use trading for the Fibonacci. Okay, so I want to believe that for this webinar, we've been able to gain 1 or 2 things. So the webinar is also open for values. If you have, in fact, I don't have problem. If you have any knowledge that you want to share with us, if you have any knowledge you want to share, feel free to let me know that you want to share with us. I would allow you to share. So thank you everyone who made it for this webinar today. And it is a pleasure for me to be here to assist. I know some of this tutorial that we're holding, some people may not see it as important because they are not asked to pay for it. So some people will ask you to pay and you won't even get a single value. So, but because it's free, some people may not consider it as worth it to be there. So, but you that have made time to be here, I want to assure you that you're going to learn a lot, even if it's not, I do decentralized trading. I trade pancake and I understand how to evaluate a coin in decentralized exchange. So with time, we could learn all of those things. How can we trade a coin? How can we identify a coin with liquidity? How can we know coins that have whales buying it? How can we know paper hands, coins that we shouldn't go into when it's listed? So these are the things we could also learn as we move forward. So want to welcome you once again in our next webinar. Thank you for being part of this class. I'm going to unmute everyone here who has. Okay. So I'm going to unmute everyone to say bye to Axel. So I'm going to unmute everyone. You can say bye.
Good night. We appreciate you. Good night. Please
Axel,
our next
everyone.
class.
All right. Good night, Victor Queen. Thanks so much.
I want to wish us a lovely week.
Thank you.
Good night.
Good night.
Good night.
Good night.
Lovely night. Bye.
Good night. God bless
Good
you.
night, man. Thank you, man. Really appreciate. We would love to have the beginners class, but we want to get the
Now, please, I think the recorded this is from the beginning.
Good night, everyone. Good night.
Good night.